Hi, John. How are you today?
Okay, Elliot, as we are recording this in the US, the government has been shut down. We don't know for how long. News reports suggest that roughly 750,000 federal workers are expected to be furloughed, and some actually might get potentially fired. I and many others have relatives and friends in government, so let's just hope this is not long term, because when you don't have the government working in any jurisdiction, obviously things that need to get done aren't getting done.
One of the reports I read said there really isn't a shutdown playbook because everyone unfolds in its own way. So we'll see if this is short or long. And again, whether there's movement over the issues that brought us to this point.
The last one that was done during the first Trump administration, and I believe it was 18 days long. So we'll see. I want to start with something. I know you have comments about this as well, because we have commented that the State Department under Secretary Rubio dramatically cut the amount of staff involved in crafting the Trafficking in Persons report. That is a mandated annual report to the public and to Congress each year. And this report had not yet been released. I think it was due back in June. It has just been released. It's available on the State Department website. I know you have some comments. I just want to have people focus on some of the things in there. They talk about different jurisdictions. They talk about different ways in which trafficking occurs. There is a section in this edition that talks about how traffickers use AI to weaponize and enhance their operations. So they do a number of things that the report has uncovered, including using translation tools to craft what they're calling culturally nuanced messages that sadly resonate with victims in their native language. They can be used to automate and scale grooming of potential victims via chatbots, optimizing manipulation tactics through natural language processing, sentiment analysis. So there's a whole bunch of things. Obviously, deepfake photos, video manipulation, voice and video generation. So there's a lot of other things in the report, but just wanted to call out, since we do talk quite a bit about AI, this is one of the negative uses of artificial intelligence.
2025 marks the 25th anniversary of the passage in the U.S. of the Trafficking Victims Protection Act, and that is the legislation that mandates this report. So that's worth marking. There were a number of other interesting things in the report. One that caught my eye was a focus on the fact that healthcare workers and organizations are often the first point of contact with a trafficked person, and that more training to equip healthcare systems to identify and respond to human trafficking can be a valuable tool. So again, not something really for our audience, but as we continue to pay important attention to this really terrible situation throughout our industry and globally, something to think about.
A quick aside on anti-trafficking. Organization that we've worked with and have participated in a number of our webinars, Polaris, has put out some recent information via blogs and other things on their website. So when you get a chance, take a look at that. They talk about the hotline and some of the other things that Polaris is known for. So because we've just talked about this report, take a look at what Polaris, one of several large organizations that are involved in anti-trafficking, but they certainly are one worth paying attention to. So polaris.org is the website.
Where would you like to go next, John?
FinCEN has issued a number of requests for comment this week, so maybe talk a bit about that. One of them is there's a proposed survey on the cost of AML CFT compliance, but only as it pertains to non-bank financial institutions. So they list them on the website: casinos, card clubs, MSBs, insurance, dealers in precious metals, credit card operators, and loan and finance companies. What's interesting about this, it's a survey to determine the cost of compliance, and reading from the release, responses will aid in understanding the financial impact of these regulations and will be used to shape deregulatory proposals consistent with the executive orders of the Trump administration. These comments are due by December 1st. I think this is only the beginning. I think there will be similar requests for comments for traditional banks. Obviously, we all believe that the need to make BSA AML more efficient This will bear a lot of watching. Interestingly enough, crypto companies are not included in this description here. So I just thought we'd highlight that. Anyway, so that is just released, and you have until December 1st to comment on that request from FinCEN.
The only point I would make beyond what you said is that I hope, but I'm not sure hope is going to get us there, that there's a recognition that cheaper or less expensive doesn't necessarily mean equally effective. And I'm a little concerned that in any march to deregulation, that effectiveness gets lost in the background. And as I've said a number of times when you and I have talked about these issues, we could be setting ourselves up for an equivalent in the credit markets of 2008, 2009. So we'll see. You and I may still be in seat and able to talk about having been right or having been wrong. We'll have to see.
So two other things. FinCEN issued another request, and this is on the paperwork reduction one. This is something that is done in conjunction with OMB, but this is looking at, among other things, 314A. Did you see that one?
I did. There were 5 specific areas that the FinCEN requested comment on. So I'll read them. Whether the collection of information is necessary for proper performance of the functions of the agency, including whether the information has practical utility, whether the accuracy of FinCEN's estimates of the burden of collection of the information. So in these OMB Paperwork Reduction Act notices, the agencies estimate how long each function takes in hours and minutes. So they're asking for comment about their estimates. Ways to enhance quality, utility, and clarity of the information to be collected. Ways to minimize the burden of collection of information on respondents. And then estimates of capital or startup costs and costs of operations, maintenance, and purchase of services to provide the information. And then there's a long laundry list of other things that can be commented on. That I won't bore everybody by reading because it goes on for about a page. These are very normal. You get them for the CTR form, the SAR form, all that other stuff. But it'll be interesting to see what FinCEN does with all of this stuff.
There is in that notice a chart that I thought was interesting, and this is table number 2. This is the section 314A requests and responses per year. So going back to 23, 24, and to date 25 with some estimates since we're not finished with 25. So the number of 314A requests, the 3-year average is 116 per year. Average number of subjects in those requests are 5. The number of FIs that get the requests, almost 13,000. And the total responses to this are almost 7.5 million. So clear, at least, that there's a lot of responses to the request, and the request could either be hits or non-hits. But I thought that was interesting, that definitely 314A is an active part of what law enforcement through FinCEN seeks in terms of information gathering.
I'll be interested to see if there's any comments from local law enforcement agencies, because they, again, law enforcement's the endpoint consumers of a lot of what goes on here.
Now, the last thing we've seen from FinCEN thus far this week as we're recording is a issuance of the real estate reporting form, coupled with the delay of the rule until March 1st of 2026. So the order postpones the reporting requirements for the real estate industry that were added under AMLA to, quote, provide industry with more time to comply, consistent with the administration's agenda to reduce compliance burden, while still adequately protecting the U.S. financial system from money laundering, terrorist financing, and other serious illicit finance threats, unquote. I'll just leave that there. Anything you want to say about it?
The original effective date was December 1 of this year. I think the form release is late, and so there only would have been 2 months to get your collection process tuned up. So now they're giving the industry 5 months, which feels okay. It might have been a little more facetious if they'd have pushed it out to the end of 26. To me, I think this sort of was an effort at the balancing point. I've looked at the form. There's no big surprise there. I'm not sure why it couldn't have been released in July, for example, and then December 1 would have been fine.
I think watch this closely and see if that rule does go into effect. But based on what you said earlier regarding our concerns, our collective concerns I'm paraphrasing, about resources. AUSTRAC did something interesting that is relevant to the theme that you raised. So why don't you tell us about that?
AUSTRAC, which is the Australian FIU, the equivalent of FinCEN in Australia, they warn banks that it will escalate oversight if it sees AML compliance and control standards slipping. And this is in the context of the large banks in Australia over the last number of months announcing reduction in force of about 6,000 total across those banks. Brendan Thomas, who's the chief executive of AUSTRAC, said, and I'm quoting here, "We are closely watching the impact of staff reductions in the banking sector. If we see a decline in staffing or investment in anti-money laundering capabilities or banking sector improvements start heading in the wrong direction, AUSTRAC will escalate its regulatory response." And resources is something we've talked about a lot. When things are going well in their financial crime prevention spaces, often executive management will say, we probably could cut back a little bit there. And here, the regulator is basically saying, we're watching. So I think it's a good reminder.
But very interesting and related in terms of what's going on in the US. We've talked many times about the pausing of portions of the Corporate Transparency Act. The EU just announced what I guess can be called a crackdown. 11 EU states face infringement over beneficial ownership. So they've launched infringement proceedings against 11 member states for missing the July 10th deadline to provide full access to data under the 6th AML directive. So the countries include Belgium, Denmark, Germany, Estonia, Greece, Poland, Slovakia, Sweden, Italy, and Cyprus. And according to one analysis, what was required is information on who owns the companies, the trusts, similar arrangements, access for regulators, banks, and quote, anyone with a legitimate interest, and accurate up-to-date data across national registers, compliance with various privacy rules. So thought that was an interesting move by the EU. Anything you want to add to that?
The sixth AML directive includes the establishment of what's called the European Single Access Point Omnibus Directive. It's built in there. And what is that? That is a hub where all of the beneficial ownership registries of the constituent countries have to go into that. And as part of the sixth AML directive, all of the member states have to transpose the elements of the directive into their country laws. And so these 11 countries have not yet done that. This was one of the first deadlines. It could just be these are all caught up in their own legislative processes. It could be that there actually is some pushback in some of those legislatures about the elements that you spoke about in terms of access.
According to the press release from the EU, it said that they have 2 months to reply. If they fail to do so, the Commission may pass to a next step, according to the note here, and issue a reasoned opinion, unquote. So we'll see.
Yeah, exactly. I saw that Adrienne Harris, who's the head of NYDFS, is stepping down. Did you see that?
Yes, and it's interesting. You very rarely hear focus on any state regulator, but certainly Harris has gotten a lot of very positive press for the proactive nature of that department. The same week that was announced, they also issued guidance for virtual currency customer protections in the event of insolvency. So that guidance document came out as well. But I have not read, and maybe you know, have they appointed an interim at this point? Because I assume the governor does that, right?
Yes, Caitlin Asrow, who leads DFS's research and innovation division, will take over when Harris leaves the post starting October 18th. The governor's office has not said anything that I could find, but Astrow's been with the department for quite some time, is well respected. So I don't think it'd be a big surprise if she is appointed to head the department, which probably would give people comfort.
Right. Yeah. So that's all I have on my end.
I just wanted to mention is I saw an article that was taking a look at court records and determined that U.S. money laundering prosecutions have dropped by 24% so far in 2025 compared to the same period in 2024. The analysis in that article was that some of this drop may be attributable to the fact that many investigators and law enforcement, their efforts have been redirected to immigration related issues, causing case investigations to slow down and therefore not get all the way to a prosecution. I know you're shocked.
There's gambling going on in Casablanca.
Exactly. Captain, here are your winnings. Talk about some of the things you've been working on.
We've interviewed a few folks. Some of those have not been posted yet. I interviewed Tom Vartanian. I think we mentioned that last week, and that'll go up in the next week or so. Also, each year I teach a class at George Mason Graduate School on money laundering, and I get a couple of the students whose papers are pretty exemplary. We post them on our website and on LinkedIn. And so two of those have already been posted. One more to come, and to ask folks to take a look at that. I think it's always so important to encourage the next generation of hopefully AML professionals. Still efforting a couple of other interviews. I did interview a few folks on physical security issues. That's an issue we don't typically cover that much, but this organization has done a lot of work in that space, so I thought that was important. And as always, if you have themes, individuals, companies that you want us to talk to, please reach out to either of us. We're more than happy to schedule those.
Last month's webinar, Enhancing Your KYC Program, should post by the beginning of next week to our website. And on October 23rd, our next live stream webinar, 1 p.m. Eastern Time, on AML compliance best practices. You can sign up for that at our website. So, John, I know you're traveling to Milwaukee and you're going to watch a Brewers game live. So you travel safely and enjoy the game. And I will talk to you next week.
Thank goodness for sports to keep our minds active on other things, right?
Yep. Bye-bye.